Welcome back, folks. We are looking at a chart of gold. Now, you might think it was quite choppy yesterday. However, there was a pretty clear market maker buy model, which I'll break down in today's video. Okay, so let's first just jump into a 4-hourly chart. Okay, because I think that'll make it a bit easier to start with. Okay, so 4-hourly chart, we can see. Let me clean up the chart. We'll talk about these lines in a moment. Okay, so obviously we had the big run up, and then we started to come down. We have displacement here with this down candle. Okay. And then the market moved up, okay, to balance this inefficiency, okay? So I think if you look at this 4-hourly chart, you've got to pump up, okay? So this is the pump for the dump, okay? So now we've started the dump, and it's going back, balancing out inefficiencies on the way down, okay? As well as stop hunting anyone that may already be short, okay? Getting people out of their short positions and maybe even enticing long traders into the market, okay? But eventually, what does it do? Pump for the dump, okay? Takes out liquidity, right? And then trades back up to stop hunt anyone that may already be short. That's kind of what the market does, okay? And that is essentially our market maker buy model, okay? So we're moving down, okay, to take liquidity and into other PD array support zones, and then back up to PD array resistance zones, okay, or liquidity above. So taking out liquidity below and then starting to move back up to balance any inefficiency, okay, which is this rejection block. Markets always need to come back into these wicks. As I mentioned yesterday, look for your large wicks and apply midpoints, okay? So I'm going to walk you through this market maker buy model, okay? Now, let's jump down to a 15-minute chart and break this down, okay? So let me just scrunch up this chart. It might look choppy, but I guarantee you that it is completely algorithmic. And once I break it down for you, you'll be able to see exactly how I traded this, okay? Now, I also mentioned key draw on liquidity, okay? So I mentioned that there'd be a draw liquidity at this level, okay? And then if the market was moving down fast, we may even get down to this level. At some point we will, okay? And so if we look at the 15-minute chart, that's this level here, okay? That's the first level of liquidity that I mentioned, okay? And just on a 15-minute chart, you can see equal lows, okay? So that was my first exit, 25. Oh no, that was my first exit. It was a bit high actually, 25.10, which is somewhere around in this zone here. There were other equal lows that I was targeting. I think around there. That's right, exactly right there. Typically, I will take a single trade, journal it, mark out the chart, but here we've got a whole market maker buy model. So I basically sold for the first half of the day, okay, and then bought in the latter part of the day as I've identified this market maker buy model, okay. So that's my journal there. Ignore the numbers, okay. That's all relative to an individual's account size. So you can see first half of the day it was all sells, second half of the day it was all buys, okay, and targeting that 25.19 level at the top there, which was my exit here, okay. So let's talk about this now. A market maker buy model, there's plenty of information about these models on YouTube, so I'm not going to go through the overall model itself, but there's your original consolidation, okay, and as it's going down, the market makers are basically distributing, okay. Now you've got to understand what is the draw on liquidity, okay, and that was to these lows here. So low hanging fruit, okay, and this here is previous daily low. So look at that on your charts, okay. That low there in the green line was where I took my longs not yesterday. Let me see where they were. You can see that's a dump for the pump, and that's where the market has come back down to stop out anyone that hasn't taken profit. So this is why it's so important to take profits if you are long. On this trade, I took the long down here in London, and I closed it at 2513, okay, somewhere around here. And that was a predetermined target, okay. Now, had I not closed it, you can see the market's come back down and stopped out anyone that hasn't closed their existing positions. That was journaled here. As always, I journal all my trades. Yep, this one here, I believe. Yep, 2511. Yep, that's the one. Okay, so I think I did a video on that as well, so go and watch the video on that one as well, okay. Now, continuing on, so you've got your original consolidation. Okay, now notice what you have here. This is the trigger for me to enter in this market. In my video, in the previous analysis video, I spoke about this move being the chop, okay, and I had already anticipated that that would not be a real move to continue higher, okay, and I was looking for movement down. So there's the pump for the dump. It all starts here in Asia, okay. How many candles do you see there? This is a 15-minute chart, right? And when does that happen? Right inside, look at the time down the bottom, 9:30 p.m., okay. Didn't I say the best time to trade the Asia market is 9:30 p.m., okay? So if you're seeing this dump, okay, prior to that 9:30 p.m., you can take this long as well. There's a trade setup there. If you can identify this setup and manage your risk, okay, and see the things that I have taught you in terms of price action, okay. Now, I'm not looking for longs, okay, I'm looking for shorts, okay, based on all the things that I've mentioned in my previous analysis video, so I don't take that long, okay. But that in itself was quite nice, okay. There's 80 pips there, plus, going back up to filling in the fair value gap on the 4-hourly chart that I've just shown you previously, okay. So that hits the 4-hourly fair value gap premium level, okay. So there is the fair value gap, okay. So that move up there in Asia yesterday hits that fair value gap premium level, and that's where I've started to put on positions to the downside. 2518 was the kind of level that I started to short from. Okay, now going back to the 15-minute chart. So that's the pump up for the dump. Okay, that starts the dump, and we can see there's consolidation there. Okay, it's left these equal highs. I'll talk about that in a moment. But now it's just coming down. Okay, down, down, down to the draw on liquidity, which is these equal lows. Okay, and then the low of the previous day. Okay, so that's the sell side of the curve, and as I've shown you, the first half of my trading was all selling, okay, shorting, and peeling off my shorts at key levels. For example, I took off a position here at these equal lows at 2510. So you'll see one of my exits was 2510 right there, okay, 2510. And so as it's going down, I've just started to peel off my position, okay. And now what have I said about 9:30? Okay, 9:30 to 10 a.m. will make the low or the high in that New York session. So again, these patterns repeat, okay, so you've got to do the study. I've said it before many times, you've got to study the charts, study my videos, study my trade journals. That's what it's there for. It's there for you. I'm marking out these things for you to study, okay? If I go back to a previous trade that I did, I spoke about this on a video as well, this one here. Okay, we had a dump and coming into a key PDRA support zone, okay? And it's 9:30 a.m. So here, 9:30 a.m. is at the low of the day. So we're expecting pricing to reprice higher, okay? So again, it's that 9:30 a.m. to 10 a.m. What time does the market make the low there? 10 a.m., okay? Where are we in terms of price? We've taken liquidity, okay, and taken the low of the previous day, okay? So I'm expecting the model to reprice higher from there. We don't close below that previous daily low, okay? We immediately reject, okay? So then you can jump down to a shorter time frame and look for an entry. So if I just jump down to a 5-minute chart, okay, you can see as soon as we take that previous daily low, change of break of market structure, and then pull back, and then you can jump down to a 1-minute time frame as I've shown you in previous videos to look for a change in the state of delivery. Okay, but as soon as we get this engulfment, we now have a change in the state of delivery. This is the pullback. Okay, again, there's equal lows, so it's taken liquidity there, coming to this rejection block and moved up higher. Okay, and your exits back up is going to be back up into the consolidation. That's the original consolidation, and one really easy technique to exit any market maker buy model is to just take the midpoint, okay, of the range, and that can be your exit. Okay, I've said to you before, look for where the market has not traded back into a 4-hourly wick, which is essentially a gap, and mark at the midpoint, and that's where that midpoint comes in at, and that's where I've taken my exit. And anywhere in that zone is where you can take out your targets. Okay, so that's the market maker buy model that I traded yesterday. As I said, the first half of my day was all selling, and the second half of my day was all buying. You can see exits at 2519, 2516, 2517. As this is going up, I'm peeling off my positions, okay, in that zone, starting from this 2516. So this is a rejection block as well. So I started to peel them off, okay. Don't always target the best exits or the best entries. My objective is to get as much out of the range as possible, okay. So I hope that that breaks down this market maker buy model, taking into consideration, let me just get rid of these lines now, what the draw on liquidity is, okay. So let me see, what time frame did I mark this on up here? Where is that? This one here, I think it was an hourly chart, 15-minute. Okay, so I just want to show you the same chart, right? So this is the level that I had identified. Okay, you can see equal lows right there. Okay, and that there is the low of the previous day. And you can see that's where we've come down into, and also have this level marked as well in case we continue to go down. But it all comes down to time. Okay, what time did we take out these lows? 9:30 to 10 a.m. At which point I'm expecting that to be the New York session low. Okay, if we're moving down. All right. Previously, if you look at this, this was 9:30. This is 9:15, 9:30 candle, okay? And again, 9:30 to 10 a.m., we're up high, okay? So you've got to look at time. That's important where you are in terms of price. So yesterday, 9:30 to 10 a.m., we were up high. So we're expecting repricing lower, okay? Today, that was the day before, right? Previous New York session. Last night's New York session, 9:30 to 10 a.m. was at low. We've taken it low the previous day. So I'm expecting repricing higher. Not just on its own, but in context of what the market's doing, okay? Looking at what we have in terms of, we've got a consolidation, and just looking for key signatures that kind of tell us, well, this could be a market maker buy model, and looking for that reversal, okay, not just buying because we're at the low of the day and it's 9:30, but looking for how the market is reacting and behaving at that price. With the low of the day, it's 9:30 a.m. New York session, how's it behaving? We're getting a rejection, we have a change, we have a market structure break, right, and then complete engulfment, one single candle. This is your bullish order blocks, bit of a deeper retracement, okay. So anyone that's not comfortable buying at that level can wait for another bullish signature, okay. We've got another displacement, fairly gap, okay. So there's lots. So you find now all the way up, there'll be bullish signatures and plenty of opportunities to get in. So there's fairly gap there, moves up back into the order block, and you can just continue seeing this. Okay, there'll be lots and lots of different bullish signatures that I can go through. But ideally, it's all about time and price and trying to identify what's the market reaching for. Okay, so what's next? I think that this is just another chop. I think there's very clear equal highs here. Okay, that I believe the market will take. I don't know, and I don't think we'll get back above here. Maybe, not really sure, because we look at the higher time frame, 480 chart, we've pretty much come back into this bullish as bearish order block. Okay, so I think these highs will be taken. That's just too clean, and then maybe we'll still continue to roll over. Remember, I've mentioned these equal lows. Okay, mathematical target here at 2485. Okay, I did mention that if we closed below these up candles, which we have not, then we could use that as the manipulation leg. Okay, and calculate a target to go lower. Where is that target? Let's see if I still have that on the screen. So that's down here, okay, into this fair value gap as I spoke about in a previous video. But we haven't closed below this swing low yet to validate that being the manipulation leg. So we're still trading in that range, okay? You've got to be careful in the current environment with heavy news still on the calendar, okay? So we've got USD news. So here Thursday, we've got USD news here in the New York session, okay? So we need to be careful of that. That is, they are starting from 8:30, okay? And then we have the same news tomorrow, high impact at 10 a.m. on Friday as well. So I expect those two news announcements to move this market, okay? So you've got to be careful of the volatility. They might spike it up here, okay? But I am higher time frame biased to the downside, okay? But as I said, you got to be careful. You got to watch the setups at the key times. Look for the pump for the dump, or the dump for the pump, okay? This was a very clear pump up, okay, for the dump, okay? We've taken out that liquidity. If we take a look at the order flow on a 4-hourly chart, we can see order flow is bullish. All we've done really in this move down is coming to these order blocks on a 4-hourly chart, okay? And we've now got a lot of liquidity resting above, okay? This here is Wednesday's high, okay? So we've taken out previous daily lows, and I would expect now to take out Wednesday's high, okay? Equal highs there. So all that liquidity, in my view, should be taken. So it's going to be choppy, I think. I think that the news announcements are going to whipsaw everybody out, okay? So existing long holders will be stopped out, short holders will be stopped out. And so I think that you've got to be really, really careful in the next couple of days. But that's also where the greatest opportunities are if you can manage your risk and have the discipline and understand price action, okay? So order flow is telling us bullish, okay, for the moment. And so I'll be looking for these equal highs, and timing is going to be the key. I won't be surprised, although not looking for, if these highs are taken, okay? I will now talk with you in a future video.